where'd the money go? No, really. When the crypto market goes down, where does the money go? If you've been watching the crypto market lately, then you may have noticed stuff like this. Bitcoin dropping below $25,000, which, we all thought those days were like long gone. And then there's things like this, Ethereum falling around 75% from its all-time high, which is just bananas when you consider it might just be the most widely used network in all of crypto. But if you've been watching even closer, then you may have noticed that the overall crypto market has lost about 2/3 of its value, dipping below $1 trillion, which means in the last 6 months, we have witnessed over $2 trillion just leave the market. Poof, just gone. And so $2 trillion is a considerable amount of money, and if it's left the market, then where did it go? Well, go ahead and hit that like button and subscribe to the channel, because today you're gonna learn the truth. When the crypto market drops, you're gonna learn where the money actually goes, and it may actually surprise you. And of course, none of this is financial advice, so let's jump in. So if you go to CoinMarketCap and look at the last year in crypto, again, this is June of 2021 to June of 2022, you get to see a nice little run up until the market peaks in November of 2021. Now during this time, the market basically doubles in value, reaching around a $3 trillion market cap. And you know what? Everyone in crypto was happy, making money, and we were all planning our Forbes magazine interviews. Now, we know that November marked the top of the market, and in typical fashion, the downturn began and we entered bear territory. And you can see from November's peak of $3 trillion, we trickled down to recently dropping below $1 trillion. And so with the difference of $2 trillion just now gone, logic says it had to have gone somewhere. Well, generally, there are two places where the money goes. The first place is sort of obvious, and the second is actually rather fascinating. So let's get the first place out of the way, since the majority actually goes to the second place. So the first place is exactly where you would expect. When the crypto market begins to drop, some investors will pull funds out of the crypto market and place the money either, under their mattress or into other investable assets like traditional stocks, although that might not be the best idea at this time, but also bonds and treasury bills. The idea is to get out of a failing asset and place funds into something safer or stable. And although there are investors who physically pull money from the crypto market to possibly bury it in their backyard, that's not where the bulk of the money actually goes. When the crypto market drops, most of the money just actually disappears into thin air. And I know that sounds like a joke, but that's the truth. Now, to understand how this happens, you first need to understand the psychology that impacts the crypto market. You see, the market and the individual cryptos we invest in are driven by supply and demand. And if you've ever tried to buy nachos at a baseball game, then you know this principle all too well.
$27.50 for some chips and cheese? Crazy.
But that supply and demand is fueled by investors' perception. And so, for example, if investors are feeling pretty great about ABC coin, there will be a ton of interest around that coin, which will drive up the price. Likewise, if investors are feeling doubtful about ABC coin, then there will be a slump in activity around the coin, and that'll push the value of the coin down. And so this push and pull between bullish and bearish sentiments is how a crypto's price gets quoted to you on a daily basis. Now, it's important to understand that to understand this next point. When you buy a crypto at a particular price point, it is investors' perception that dictates if you're going to make money or lose money. But when you lose money, that doesn't necessarily mean someone else gained money. So for example, let's say you buy ABC coin for $20 and the next day it drops to $15 and you sell it at that $15 price point. That means you lost $5, but the person who buys your coin at $15 does not instantly gain the $5 you lost. It's just gone. For that person to see a gain, the coin would need to move back up to $20 again. Here's another scenario. Let's say ABC coin is at $20, but you don't buy it. And then the next day it drops to $15 and then you buy it. Again, you're not in profit at this point, even though the asset has lost 25% of its overall value. And so think about it like this. If the overall crypto market is valued at, let's say, $3 trillion and it drops by 50%, that doesn't necessarily mean trillions went somewhere else. It means that it mostly just disappeared. But wait, so does that mean the crypto market is just all smoke and mirrors? Well, yes and no. You see, a crypto's price is actually based on two factors: its implicit value and its explicit value. And so its implicit value is directly connected to buyers' perception. So for example, if ABC Coin announces that its network can now process 1 million transactions per second, that advancement could create a ton of enthusiasm around the coin, which could drive demand, increasing the price to new heights. Now, keeping with that same example, the assumed benefits of 1 million transactions per second feeds into the perception that ABC coin is now worth more, and that additional value is its implicit value. There are many factors that can impact the implicit value of a crypto, like the problem it solves or even the team that's connected to the project. But the bottom line is that emotion or sentiment is what moves the needle on a crypto's implicit value. Now, this is different from a crypto's explicit value, which is based on the tangible value of the organization behind the coin. So for example, if ABC Coin receives $15 billion in funding from a VC firm, and let's say they haven't spent a dime in that, then they have a real book value of $15 billion, and that's their explicit value. So again, by taking the actual assets of the organization, which could be cash or land or machinery, and deducting its outstanding debt, you arrive at its explicit value. And it's the combination of the two, implicit and explicit value, that should make up the actual value of a crypto. Now, understanding their relationship to each other is actually very beneficial to a crypto investor because you can use this knowledge to your advantage. The first comes in the form of short selling a crypto, where essentially you can profit from a crypto decreasing in value. So again, if ABC coin is valued at $20 a coin and it drops to $15, through a short sell arrangement, you can make money on that difference. Also, in my last video, I explained a crypto value investing strategy that was founded by the great Ben Graham. If you haven't seen it, I want to encourage you to check it out. But the foundation of the strategy is to find cryptos that are undervalued because although the crypto is solid, investors' perception is low, and so price is also lower than it should be. Jeff Bezos once said about Amazon stock, "The stock is not the company, and the company is not the stock." And he said that at a time when Amazon stock went from $113 per share to $6 per share, and investors were certain Amazon was just done for. And what Bezos was alluding to was, although the price of a stock or a crypto may fall to scary levels, a major driver for a drop is generally how people feel and not just concrete metrics. There were people who bought the Amazon dip because they understood the relationship between implicit value and explicit value and became very, very wealthy. And likewise, I believe there are people right now buying the crypto dip that will be handsomely rewarded in the future. So when you see a price of a crypto move up or down, that's a signal of how the investing public feels about that particular asset. Bullish sentiments do not only grow your portfolio, but it can also create wealth almost just out of thin air. And just as quickly as money can be created, it can also be wiped away in what feels like a blink of an eye from bearish perceptions. When you see the crypto market drop and you see, trillions of dollars missing, just know that it may have vanished for now, but in the big scheme of things, the money probably exited the market the same way it entered the market, from a little place called nowhere. But let me know your thoughts. How can this knowledge impact your trading strategy? please let me know in the comments. Also, when crypto drops, what coins or tokens are you picking up? Please also let me know in the comments. And lastly, I want to thank you for your time. Your time is so important to me, so I do hope you found value, and until next time.